Welcome back to Investing Talk Podcast.
Today, we're looking closely at Briacell Therapeutics.
That's right, a clinical stage biotech focused on cancer immunotherapy. We've got your due diligence reports, some news clips, and our job really is to sift through it all and figure out what's most important for you to understand about Briacell right now.
And there's quite a bit to cover. We've got financials, the actual technology they're developing, where they fit in market,
Right.
the risks involved, valuation talk, and some recent news about their data and, importantly, funding.
Okay, let's get into it. Maybe start with that financial snapshot.
Sounds good.
As you'd expect with a clinical stage biotech, product revenue isn't really part of the picture yet.
No, not at this stage. That's typical. It puts all the focus on their pipeline potential and, crucially, their ability to keep funding the research.
Especially when you look at the current numbers.
Correct. The R&D spend is significant. If we look at recent earnings, Q2 2025 EPS was negative $2.33. That actually missed estimates.
Okay.
And trailing 12 months, it's around negative $5.03. Analysts are projecting continued losses for the fiscal year ending July 2025. But maybe some improvement the year after.
So with losses like that, a positive PE ratio is, well, it's just not applicable right now.
Yep.
What about the balance sheet? You mentioned funding. I saw some potentially concerning figures there.
Yeah, well, what stands out is you've got total assets around $5.87 million.
Okay.
Set against retained earnings that are deeply negative. We're talking negative $85.44 million.
Wow. So that's the accumulation of past losses, essentially.
That's it. It suggests they've historically spent much more than they've brought in,
Yeah.
which can signal, let's say, a weaker equity position. Very common for biotechs burning cash on development, though.
And I imagine with all that R&D, free cash flow is probably negative too.
Highly likely, yes.
Wow.
Funding clinical trials eats up a lot of cash.
Right.
And you also see negative or basically negligible return on equity. Again, it fits the picture of net losses and those negative retained earnings.
Okay, so the financials reflect a company heavily investing in its future potential. Let's pivot to what they actually do. Cancer immunotherapy. Bria-IMT is the lead candidate for breast cancer.
Correct. Bria-IMT is designed to activate the patient's own immune system, get it to recognize and fight the cancer cells. It's a key approach in oncology now.
And Briacell thinks their specific platform gives them an advantage. It's patented.
That's their position, yes. They believe their proprietary platform, which is protected, offers a unique edge.
And Bria-IMT has shown some promise, hasn't it? I think I saw something about FDA fast-track status.
It has. The fast-track designation is important. It's meant to help speed up development and review for drugs addressing serious conditions with unmet needs.
And it worked even in patients who failed other treatments.
That's a key point, yes. Showing efficacy there is definitely encouraging. It's currently in a pivotal phase 3 trial that's a late stage for advanced metastatic breast cancer.
Okay, phase 3. And besides Bria-IMT, they're also working on these off-the-shelf therapies, Bria-OTS and Bria-OTS Plus. How are they different?
Right, so this is sort of the other arm of their strategy. Bria-OTS and OTS Plus are designed to be, well, off the shelf, ready to go.
Ah, so not personalized like Bria-IMT.
Exactly. More like a standard drug, potentially usable for a wider patient population without needing individual tailoring. They're testing these in phase 12 trials for solid tumors, think prostate, melanoma, lung cancer.
And wasn't there some early, maybe positive news about Bria-OTS recently? Something about lung metastasis?
Yes, that was an interesting early data point. They reported a case where lung metastasis resolved in a metastatic breast cancer patient treated just with Bria-OTS. It's early, but suggests potential for that platform too.
So a two-pronged approach.
Yeah.
Personalized and off the shelf. Now, what about the competition? Sounds like a crowded space.
Oh, it absolutely is. Highly competitive. You've got major pharmaceutical companies with immunotherapies already on the market. Briacell is definitely an emerging player here.
What are the big trends driving this whole sector?
Well, unfortunately, the rising incidence of cancer globally is a major driver. There's a constant need for better treatments.
Then you have advances in personalized medicine, our growing understanding of the immune system that's fueling innovation.
But it's not easy, right?
Not at all. You have really high regulatory hurdles. Clinical trials are incredibly expensive and take a long time. And there's always new competition cropping up, like different kinds of cell therapies, say RRT, for example.
So how does Briacell's dual platform strategy stack up against competitors? Does it differentiate them?
It does seem to be part of their differentiation strategy. Having that personalized therapy, Bria-IMT, in late-stage trials, while also developing these earlier-stage off-the-shelf options, It's a bit different from some peers.
Like who?
Well, you look at Adaptimmune Therapeutics, they're more focused on T-cell receptor therapies. Fate Therapeutics and Allogene Therapeutics are quite invested in off-the-shelf NK and T-cell approaches, including allogeneic RAT. So Briacell's mix is somewhat distinct.
Interesting. Okay, let's talk risk and valuation. That's always crucial for investors. I saw Briacell has a pretty high beta, around 1.82. It does, and that signals higher volatility compared to the overall market. The stock price tends to swing more wildly.
Expected for a biotech, maybe.
Often, yes, especially clinical stage. News about trials or regulators can cause big price movements up or down.
And there was a really stark number mentioned in the analysis. Something like an 85% probability of bankruptcy. That sounds alarming.
It is. That's a very high figure and points to significant financial distress risk. It comes back to what we discussed earlier, the negative working capital, the ongoing losses.
Right.
The fact they aren't generating revenue yet. It raises serious questions about their liquidity, their runway, how long can they operate without more cash?
But despite that risk, analyst price targets seem, well, quite high. Average around $23.50 compared to a current price, maybe around $4.30. How do those two things coexist?
That's the classic biotech dilemma, isn't it? Huge potential reward versus significant risk. The high price targets likely reflect the massive potential value if their drugs succeed in trials, get approved, and capture a market share. But the bankruptcy probability highlights the very real chance that none of that happens. There's huge execution risk.
You really have to weigh those two sides carefully.
Absolutely.
And speaking of cash, they just did a public offering, didn't they? To raise funds.
They did. Raised about $3.05 million by selling shares at $4 each.
Okay.
That money's earmarked for working capital, general business needs. It also came after a 15-for-1 reverse stock split or share consolidation.
Consolidating shares often boosts the price per share on paper.
It does. Sometimes done to meet exchange listing rules or just make the stock look perhaps more appealing to certain types of investors.
Okay, so looking forward then. What are the key things investors should watch for? What are the potential catalysts?
There are a few things on the horizon. Getting their enhanced platform candidates into the clinic, like PROS Plus for prostate cancer, they're targeting the first half of 2025 for that. Right. More data coming from the phase 3 BRIA-IMT trial will be absolutely critical, and presentations at big oncology conferences are always key for updates and visibility.
And the main hurdle's still ahead.
Well, the big ones remain. Will the clinical trials ultimately show strong enough positive results? Can they successfully navigate the FDA or other regulatory bodies? How will they handle the intense competition?
And funding, presumably.
And funding, yes.
Yeah.
Given their cash burn and negative earnings, the potential need for more capital down the line is a real concern. And more funding often means issuing more shares, which can dilute existing shareholders.
So let's try and wrap this up. Briacell Therapeutics. Innovative biotech, exciting field cancer immunotherapy, but definitely high stakes.
That sums it up well. They clearly have promising technology, some encouraging early results, especially BRIA-IMT in late stage and that early BRIA-OTS finding.
Yeah.
But the financial reality of being clinical stage is unavoidable. High costs, no revenue stream yet, and that significant bankruptcy risk we talked about. These are crucial factors for you to consider.
That recent funding helps. Gives them some breathing room, maybe?
Provides a bit of a lifeline, yes. But the path forward really hinges on getting positive trial data and navigating that tough competitive landscape.
And that big potential upside analysts see. You have to balance it against those very real financial and clinical risks.
Precisely. This exploration should give you a much clearer picture of where Briacell stands right now.
For digging even deeper into the numbers, you can always check their SEC filings on @GAR or their investor relations site.
Definitely. And keep a close eye on that clinical trial progress. That's going to be the main driver for this company's future.
We certainly hope this exploration has been insightful for you.
If you found it valuable, we'd appreciate it if you'd subscribe, perhaps like this discussion, and leave a comment.
Your feedback really helps us continue to bring you the analysis you're looking for.